Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, we're going to talk about the proposed spin-out of the James Bay projects that the Osisko group is planning, and also why the market reacted so negatively to the drilling update for the MIA project by Q2 Metals.
So what do you make of the Osisko Group's plan to spin out its James Bay interests into a new company called Electric Element Mining Corp?
You know, the question of what Osisko is thinking about its James Bay projects and the lithium potential has been sort of puzzling the market for quite some time. Last year around now, Bob Wares, who is part of the Osisko group, managed to persuade Sean Roosen to farm out the Plex and the Anatakal land packages to Brunswick Exploration on fairly, decent terms that would give Brunswick 90% of the of whatever lithium potential there is. And these properties were all acquired back in 2015 when Osisko Gold Royalties absorbed Virginia Mines. This was the residual land packages that Andre Gaumont still had after Goldcorp bought out Virginia Gold for the Eleanor deposit, which is now a producing mine. And it seems that Sean Roosen wasn't very interested in the lithium potential, and even as late as January, the Eau Claire project, which was another one of these gold and greenstone belt projects that Andre had generated, the Eau Claire, he farmed it out 100% to an Australian company called Cygnus Metals, and we talked about that last week. But it's been, since the summer, it's been rumored that Sean Roosen has started to understand that this James Bay region of Quebec is extremely well endowed with lithium pegmatites, the CV5 deposit that Patriot Battery Metals drilled off and published a maiden resource for in August. It is world-class, and they decided that they would spin out all these assets into a separate entity. And it was supposed to happen in September, but now it's November. Well, on November 15th, we finally got a news release, and it's interesting. There are two companies within the Osisko orbit that had projects in the James Bay region. One of them is O3 Mining, which is actually controlled by Osisko Mining, which owns the Windfall project in southern Quebec. Its focus is mainly on the orogenic gold potential of the Cadillac Larder Lake break in the near Val d'Or in the Abitibi Greenstone Belt. But it had one project called the Eleanor Opanaka property. It actually adjoins to the west of the big Eleanor project that Newmont now owns, and they received 2.4 million shares for this project to be stuffed into a new entity that they are calling Electric Element Mining Corp. Now, this property was one of those that was accumulated during the area play rush from the in the 2000s. In 2004, Virginia Gold discovered Eleanor, and nobody has really thought of this project as having lithium potential, but perhaps it does. But the bulk of the assets are coming from Osisko Development, in which Osisko Gold Royalties is the largest shareholder. Some time ago, it transferred all the ex-Virginia assets into Osisko Development, and not all of them have been farmed out. Some of them, they still own 100%. But the whole works, all the deals with their farm-out deals and everything, is being stuffed into EEMC, as I'll call it for short. And for that, Osisko Development will get 9.6 million shares. What they've also done is a private placement or seed financing at 50 cents, no flow-through, no units, $4.1 million has been raised, 8.2 million shares, and Osisko Development insiders purchased 1.4 million of these shares. So In total, this new entity has about 20.2 million shares issued, and at that 50-cent financing price, that implies a $10 million valuation. So what was peculiar about the press release is that it did not talk about how and when Electric Elements will go public. One path is to do a dividend in specie, where you take the shares that the company owns and you issue them on a pro rata ratio to all your existing shareholders. In the case of Osisko Development, that would end up with a ratio of like 9 or 10 for 1. That would certainly give the large enough shareholder base to qualify for a listing on the TSX Venture Exchange. But for O3 Mining, the 2.4 million shares, so that would end up being like a crazy ratio of 30 for 1. And it just doesn't seem worth the bother. Another possibility is that this Electric Elements merges with one of those capital pool shells, but that seems to be unnecessary dilution. And while we're all scratching our head, when and how are they going to do this, a third alternative came to mind, which is what if they merge with one of the companies that already have a significant land position in the James Bay region. And the one that sprung to mind is Harfang Exploration, which Andre Gaumont, after Virginia Mines got absorbed by Osisko Gold, he launched it. Francois Goulet, who now works for Brunswick, he was the CEO for a number of years. They assembled a large number of properties. One of them, Serpent, they've actually have a spodumene-bearing outcrop that they first spotted last year and confirmed this year. They're still waiting for assays. Assays are absolutely slow turnaround these days. But Osisko Gold used to own just under 7 million shares in this, and that after the rollback merger with LaSalle in April of 2022, that got knocked back to about 3.2 million shares. They ceased to be an reporting insider in 2021. So we don't know if they still own those shares or not. But in the last 3 or 4 weeks and 6 weeks, there's been speculation as to what is wrong with Harfang. Why after they announced the spodumene-bearing outcrop, the stock popped about 21, 22 cents. There's been relentless selling. And even during Explore Week, somebody pounded out a huge pile of stock. In fact, since October 1st, there have been 10.9 million shares sold, of which 7.9 million were sold through Anonymous. And I've been sort of wondering, is Osisko Gold Royalties or Osisko Development, who ended up with those shares, are they actually dumping this stock into the market? Why so unceremoniously? I called Ian Campbell, the CEO. He still hasn't figured out who's doing the selling all the funds that he knows own it. They're equally mystified, or at least pretending to be mystified. And I finally, while digging through, I realized, as part of that LaSalle Harfang merger in April 2022, they did a $5 million or so financing at 55 cents, and Monarch Mining Corp bought 1.5 million shares, which translates dollars worth of stock, which is about 2.7 million shares. And Monarch Mining Corp was developing the Beaufort mine in the Abitibi Greenstone Belt, and it has fallen on seriously hard times. On November 3rd, one of the creditors, who was owed $10 million, filed notice to collect on its security. And on the 14th of November, the Monarch Mining Corp filed for bankruptcy protection, and it's now pretty much dead and gone. It last traded at a half cent. So I suspect all this brutal selling has been Monarch Mining Corp finally liquidating everything it can to try and keep the wolves at bay. And this has really hammered the Harfang market. So it's sitting there 14 cents. They plan to go into drilling the Serpent project, where they already know they have a copper target they call MISTA, which has a geophysical anomaly associated with it. They would like to have assays to also, be sure they want to drill the pegmatite outcrop also, but they still don't have the assays. They are, however, applying for the permitting, and so this company with Osisko itself still owning possible shares. It has Sean Ruson's wife as a director. Why not merge everything into Harfang? Of course, it would mean a 4 or 5 for 1 rollback. But when you look at all these other assets in there, it's in particular, there are 8 inlier claims in the Mirage, in the middle of the Mirage property, and covering part of this corridor where Brunswick has identified numerous outcrops, has been drilling, got 2 rigs going, have not updated us anything. They announced on October 31st a financing for $5 million that they said was going to close on November 17th, Friday, today. We'll see if next week it did close and we finally get an update on what Mirage is all about. So those little claims, while Brunswick can earn 90% of the Anatakau and the Plex projects by spending a whole bunch of money, in the case of these inlier claims, they have been bundled with these other agreements, but they net only 75%. And Sirius Resources published a map which showed the exact location of those claims because they happen to own an NSR on those claims because they originally sold them to Andre Gaumond's Virginia Mines a long time ago. Unfortunately, there's a $500,000 buyout on that NSR, but several of them are smack in the middle of the corridor. So this Electric Element Mining Corp could end up being very valuable down the road. So where and how it goes public is an intriguing question. Hopefully we see soon that the Mirage property does have a significant pegmatite field that's enriched with lithium. Last week, one of my Quebec contacts called me up. He claims he knows one of the project geologists who worked on the Mirage project, and he said, this geologist told me that it's a peanut. And I'm sitting there thinking, oh gosh. And he's completely puzzled as to why I'm so despondent at this news that it is just a peanut. He says, no, a PMET. I said, oh, okay, that'll be interesting. But until we see evidence of it, who cares what some geologist is telling some friend of his? We need to see an update to see if this has the scale. Because the market reaction to Q2 Metals when it published an update that only really described 5 holes into the MIA project, the market concluded this is a peanut, not a PMET, and the stock tanked. So the market's become very, very fussy about what it's hearing and seeing about projects that are even at the drill stage. They want to see big intersections. They want to see the CV5 type of discovery holes that Patriot Battery entertained us with during the past year and a half.
Why did the market react so harshly to the MIA drilling update from Q2 Metals?
There are 2 parts, I think, to this negative market reaction. Now, the MIA project of Q2 Metals, they acquired it 100% from a private group called Canadian Mining House, which is run by Tony Perron, and they issued 13 million shares in 2 stages, which the CMH now has and is free to sell. And they also retained a royalty. 1% they could buy any time for $1 million, but the 2%, all they had was a right of first refusal. And I think what happened in October was that one of these royalty companies approached the CMH to purchase this 2% royalty, and because of the right of first refusal, they had to present it to Q2 Metals. and they ended up negotiating a price where they would buy it out for $1.65 million, of which $883,000 is cash, and the other $766,000 is in cash or stock at the Q2 Metals option. Now, the vendor who's supposed to get this money is probably thinking, Q2 Metals, seeing how bad the market's gone, it has $8-9 million left. It'll have less after paying all cash. Might want to pay stock instead. So whether or not CMH was busy selling, others have started selling the stock. So it was already in a downtrend from November 2nd on. When they put out the news release this week, the second sort of factor seems to be the strange way they presented the results. They provided nice plan maps of the two areas. At the western end, the MIA project, or the MIA target. At the eastern end is the CART target. And they provided a table of the hole lengths and the azimuths for all of the holes, 12 holes. And but they provided spodumene pegmatite intervals for only the first 5 holes, all of which were into the MIA. And because the goal here was to sort out what is the orientation of these pegmatite bodies in the MIA target area, you had a number of holes drilled in different directions, and they have sorted it out. It is a Galaxy Sear type of on-echelon series of short dikes in that area. And the market looked at these descriptions and saw a whole bunch of narrow intervals. Of course, no assays. They have no idea what they assayed. They did not like the shortness of it. They didn't really see that the spaces between the intervals were even shorter than the intervals. So it's actually a pretty good interval that they had. And of course, with the CART, that's more an elongated body that's oriented in the direction of the greenstone belt. And they drilled 4 holes into that, 2 vertical holes and 2 angled holes across it. They did not provide descriptions, but these are like 9 kilometers apart, these 2 targets. This is just the beginning of a major drill program, and yet the market, Patriot Battery Metals, reported at one of its biggest intersections ever. The market said, oh, this is a peanut here, not a PMET, and sold off the stock, even though the company will have $8 million left. And now that's below 30 cents. It's managed to make its way into my 2024 bottom fish collection. And Ophir Gold Corp, which owns the Radis property to the northeast, it also got hammered. It's now down to 10 cents because their targets won't be drilled until the first quarter. But now people are saying, market's saying, oh, the MIA results are a peanut, and therefore the Ophir results will also be a peanut. But it's way too early to conclude anything like that. We already know that there's spodumene-bearing pegmatites. It's now a question of what is their orientation, what is their thickness, and what ultimately is their grade. So we're seeing all this collateral damage across the board in the James Bay region as people are going from a glass half full to a glass half empty. And it isn't helpful that Patriot Battery Metals has sunk below $10 and is trading at a lower valuation than Azure Minerals in Australia, which doesn't even have a resource estimate and has, hard cash takeover bids for $2.4 billion implied, and even higher now with the buying that has been done by Mineral Resources and Gina Reinhardt. So there's a disconnect between what's happening in Canada and what's happening in Australia. But for those who understand what this game is all about, this is really shaping up to be a great bottom fishing season for the James Bay region. And of course, Brunswick exploration could ruin that next week if it gives us solid evidence that it has another PMET instead of a peanut, in which case life will breathe back into it. We'll have our second homegrown discovery that wasn't driven by the Australians, and away we go, hopefully that happens. But if it doesn't, it'll happen with somebody else. But there will be time to accumulate some of the better resource juniors in the James Bay area.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.